When a cryptocurrency meets the conditions outlined in the risk assessment, it may be a safer and more worthy investment. Below is a detailed analysis of each condition and how these factors reduce risk, making the cryptocurrency more valuable for investment. 1. Renounce, unable to set blacklist. Revoking permissions means the contract developer has relinquished the ability to modify the contract, preventing the addition of a blacklist function that could block certain addresses from trading. This is a crucial safeguard for investors, as it reduces the risk of malicious manipulation and ensures fair trading. 2. Renounced cannot mint. When developers can no longer mint new tokens, it means the circulating supply is fixed. This eliminates the risk of developers diluting the token's value or committing fraud by suddenly increasing the supply. For investors, it ensures token scarcity and provides a more stable market environment. 3. Does not look like a honeypot. A honeypot is a malicious contract that allows you to buy tokens but prevents you from selling them. If a token is verified to not have honeypot characteristics, it indicates that investors can freely buy and sell, ensuring liquidity. This boosts the token's credibility and lowers the risk of fraud. Contract is open source. Open source contracts allow anyone to inspect and audit the smart contract code, greatly enhancing transparency. The community can review the contract for any malicious code, preventing scams. For investors, this is a key measure of the project's integrity and security. Owner cannot tamper with balance. If the contract owner cannot modify individual balances, it ensures the security of investors' funds, preventing developers or other privileged parties from altering balances or transferring funds. This protects investors' assets and eliminates the risk of internal fraud. Doesn't look like a proxy contract. Proxy contracts allow developers to modify the contract without redeploying it, providing a backdoor for altering token rules. If a token is not a proxy contract, its rules are fixed after deployment and cannot be arbitrarily changed, offering investors a security guarantee. Slippage cannot be modified. Slippage refers to the difference between the expected price and the transaction price. If developers cannot change slippage, it means investors won't face unexpected high slippage fees, thus avoiding increased trading costs. This ensures that investors can trade at fairer prices and reduces manipulation risk. No whitelist. The absence of a whitelist means the project doesn't restrict trading to certain designated users during its early stages or other periods. This ensures openness and fairness in the market, giving all investors equal opportunities to trade, which is critical for healthy market functioning. Admin privileges abandoned. If admin privileges have been revoked, it means control over the contract has been transferred to the community or fully relinquished. The developers can no longer make changes or manipulate the contract, providing an extra layer of security for investors. Cannot take back ownership. If ownership cannot be reclaimed, it ensures that even if the contract creator initially had certain privileges, once they are relinquished, they cannot be restored. This guarantees the project's decentralized nature and prevents developers from regaining control to manipulate the token, enhancing transparency and trust. No transaction cooldown mechanism. The absence of a transaction cooldown mechanism means investors are not restricted by time intervals when making trades, allowing for free trading. This is particularly beneficial for active traders, as they can buy or sell tokens quickly without worrying about time restrictions, increasing liquidity and market freedom. Comprehensive analysis. A token that meets these conditions demonstrates high levels of transparency and security. Developers have relinquished most control and manipulation capabilities, and the contract is open source and fixed, effectively preventing malicious actions. Such a token is safer and more transparent for investors, especially in the current crypto market where scams and honeypots are common. These conditions are crucial for ensuring investor protection. Therefore, a token that passes these risk checks is worth analyzing further and may be considered for inclusion in an investment portfolio.